I want to thank you for clicking on this video. If you saw the title and either you was triggered or you want to see what I was saying so that you could wreck me out or whatever, or if you just wanted to come in and be like, okay, let's see what Starr got going on. Where's she going with this? Your credit isn't bad, you are title. Either way, I'm welcoming that in. I'm welcome you in. And I appreciate that you clicked on this video. So either way, however you came in, I'm glad you're here. So that me and you can sit down and have a real conversation today. And this information that I'm going to talk to you about, this is not coming from a place of judgment because I've been there, done that, wore the t-shirt, bought the whole factory. So everything that I'm about to tell you is things that I've gone through. And therefore I can talk and I can speak on it. I don't speak on stuff that I don't have an experience in. So let's put that out there. And to make sure you know my story, I'm going to link it in the cards. So if you don't know my story, if this is your first time coming to the channel, I want you to know my story. I want you to know about me. So you might want to look at that first before you even look at this video. But my name is Starr Carter, and welcome to Starr Carter's Personal Finance channel. So let's get all the formalities out the way. Y'all make sure that y'all subscribe to the channel, like the video, share, comment, do all those good things that the algorithm loves, okay? And after this video, if this video touches you in any kind of way, I want you to scan that QR code, wherever it is up on the screen. I want you to scan the QR code and join the Credit Ready program. It's a completely free community. There's a course inside of the community. There's other resources inside of the community. And there are people in there. So it is a community. We just had our first live in the group. Now, the Credit Ready program has been around since 2023. That's when I first created it. But I had to take almost a year off from it when I went back to work in my bank job. And so now that I done got things situated, I'm back on it. And so now we're growing bigger than ever. At the time of this recording of this video, we are around in about 160 members. So I would love for you to be in there. It's going to be free to join, free for all the resources and everything, and free forever if you join between now and December of the end of this year, 2025. Because January 1st, everybody that's not serious, you're going to have to start paying. So I want you guys to go ahead and lock in now. So then, scan the code after this video. If you serious about the things I'm going to talk about in this video that made you click on to see what I was talking about, scan the QR code, or you go to starcarter.com and sign up for my newsletter, but be a part of what's going on with me and how your life can change if you wanted to. All right. Got that out the way? Let's get into today's content. So when this topic was placed on my heart, I was in the shower. And it was placed on my heart to do this video. And it's because I don't want to sound like my girl Monique, but she from Baltimore too, So she my sister, and but I love us for real. And that's one thing she loved to say. I love us for real. I do. I love my people. And when I hear a lot of people say that their credit is bad, or they need to fix their credit, they need to clean their credit, need to repair my credit, all those different buzzwords that we use when it comes to our credit, other than it being good and excellent, those are the words that I hear a lot, especially from my community, right? And we're in 2025. And I want this, if your credit is bad right now, I want this to be the last year that you ever say that I have bad credit. I really do. I want this to be the last year that you say I have bad credit. Because one thing about me, I'm one of the ones that I like to do things, and I like those things to last. So whatever it is that I do, I like those things to last, whether that's business, work, a family, my marriage. I want things to last, So when it comes to your finances, you want to have excellent finances, good finances. To me, good and excellent when it comes to credit is, people say, "Oh, you got good credit." You don't usually hear people say, "Oh, you got excellent credit." But so if you want to use those two words interchangeably, that's cool. But I just want it to be the last time that you say I have bad credit, because it's not your credit that's bad. It's the behaviors around your credit. And when I say that, I can say that from a place of, like I said, I've been there. I got the experience, but I've also talked to many people. And one of the things that when folks tell me that they want to fix their credit, or they want to improve their credit or whatever, I always ask them, what is it that makes your credit the way you describing it? Because I haven't pulled your credit report at that time. I haven't looked at your credit, so I don't know. So I need you to tell me, what is it that's in your credit that's causing your credit to be the way it is? And 90% of the time, it's late payments, charge-offs, collections. Those are the main things. And so I asked, well, what happened that caused that? What caused you to have the late payments? What caused you to have a installment loan or a credit card that got charged off? What caused you to have it to go all the way to collections, right? And the majority of the time, it's the same answers. Either there was a job loss, income might have changed. You might have had to change jobs and not making the same amount of money. Illness, whether it's you or somebody that you take care of, a sick child, older parent, whatever, life, what I'm saying? Life be life. And usually it's those major life events, or it might not have been that. It could have been where you had an emergency, like a car repair, you know, and you're living paycheck to paycheck. You could have had some type of emergency that you wasn't prepared for, and it caused you to have to forego whatever that payment was that reports to your credit report to take care of this emergency that needed that money right then and there. And so the first thing that I think about when it comes to repairing your credit or fixing it or whatever, it always starts with the mind first. In my opinion, it always starts with the mind. What is it that causes you to get in those type of situations? Most of the time, it's from poor money management. A lot of us don't like the budget. We come up with excuses not to save, or I don't make enough money to save, or I have too much going on. I don't have the money after I pay X, Y, and Z to save. And like I said, my story, I didn't have but $5 to save when I was in over $25,000 worth of credit card debt. I couldn't save but $5 a week. $5 a week. That's all I could save. And if it was $1, I would have did $1 because it was better than nothing. So a lot of times we don't want to change the behaviors around what we do that causes us to get in trouble at the worst time, at the worst time. And so I don't want it to come off like, well, everybody heard about building an emergency fund. Well, people say that because it's true. You got to have money set aside for emergency, because if you don't have money set aside, when things like that happen, that's how your credit end up taking a hit, because you don't have any room. Or what happens is a lot of people, they wind up not understanding their credit. And if you got what they consider good credit, over 650 or over 680 into the 700s, sometimes you will over leverage your credit. And what that is when you just take out too much just because you're getting approved, right? Because what is credit? Credit is buying things and betting on our future selves being well and able to pay that thing back. That's what credit is. It's something that you can't buy with cash. So you're using credit to get that thing. And we know there is two types of credit. There is your revolving credit, which is your credit cards, your PLOTs, which is a personal line of credits, your HELOCs, your home equity lines of credit, your overdraft protections, anything that revolves, anything if you pay it back, you get that limit back. That's your revolving lines of credit. And then you got your installment lines of credit. Your installments are your personal loans, your car loans, your mortgages, your student loans. All of those are installment loans. Now, a lot of people get messed up is when they try to interchange the revolving credit with the installment credit. Because installment credit is usually more of a long-term credit. Now, you can have short-term credit with installments, but usually installment credit is something that you probably would want to have no less than 2 years just for a good FICO score. So if you were to get a personal loan or a pledge loan, you will want that loan to last at least 2 years just for FICO, because FICO needs at least 6 months to build you a rating. It needs at least 6 months for that algorithm to kick in. And so by time, if you were to pay it off in 6 months, you haven't gave the algorithm time to figure out what kind of borrower you are. So you wouldn't want an installment loan for less than 2 years. You wouldn't want one. And some people will put installment type debt on a credit card. And these two loans calculate interest totally different. You got a revolving line of credit that calculates compounding interest, whereas a personal loan or an installment loan is usually a simple interest. You have a set rate with an installment loan, you have a set payment, and you have a set amount of time to pay it back. And so you already know going in how much it's going to cost you to pay, how long it's going to take you to pay it, and what's the interest rate. But with revolving line of credit, most of those are variable. So you might have got the credit card and say you got the credit card with a 0% APR, and you could have got that 0% APR for 12 months. Some of them even go up to 2 years. It depends on the lender, right? And you got that X amount of time to pay off whatever it is that you charged on that card. And if you don't pay it off in that set amount of time that they gave you 0% APR, well, when that time is up and that interest rate actually kick in, then you owe all those months back because it will retro and compound 12 months, 18 months, 24 months, however long. So you end up paying more for money. But see, people don't realize revolving credit is short-term credit. It's for short-term things. It's for things that you are supposed to be able to pay off either within that particular statement cycle to avoid paying interest on that short-term loan, because past that statement cycle, you're going to be paying more because of the compound interest. You will end up paying a lot more. So a lot of times it's about learning how our credit works and learning to be more disciplined with our money, with our actual cash money that we work for. Doing the right things. I don't care if you got to save just $1 until you can work your way out of whatever debt you're in. I had to do the debt snowball to get out of my credit card debt. And so you have to make a plan to get out of the things that causes you to have bad credit. Because there's people that get their credit repaired, fixed, clean, whatever you want to call it, and turn right back around and jack it up again. They'll fix it and repair it. They'll get it right, jack it up. Get it right, jack it up. There's people that also do that ping pong dance with bankruptcy. They'll file bankruptcy because they've over leveraged, they've overdone what they're able to do. They'll get discharged. And as soon as they get discharged, they're ready to run back out there and get some more credit. They haven't built any savings during that time. They haven't did any money management classes. They haven't did anything to learn better financial habits. And guess what happens? They usually be right back in bankruptcy door in less than a year or less than 2 years. They'd be right back at bankruptcy door because they never changed the behaviors around the things that they were doing to cause them to have bad credit and to be at bankruptcy in the first place. They never changed those habits. So if you never change those habits, if you never decide to be better with your money, if you never decide about saving for an emergency, building you a savings account outside of your emergency savings for monthly expenses, just in case that somebody does get sick or somebody does get laid off or somebody does lose their job or somebody does get a pay cut or whatever life gonna throw at you, right? If you never try to do those things, then you always going to be robbing Peter to pay Paul. And you always going to be one emergency away from an event happening, which could cause you to miss a payment, which could cause you to eventually go to collections. So we have to change the behaviors that causes us to have bad credit first. And that starts with us. That starts with our mindset. That starts with us changing how we think about credit. Because a lot of people think that credit is their money, and it's not. And when you start spending above your means, that's another way you get in trouble. Because you're thinking that credit is your money, and it's not your money. This is the bank's money. This is whoever lender, finance company, whatever. This is not your money. But especially the plastic. The whole good old credit card is the main one that people don't think about is not being their money. You will pull that credit card out for everything before you pull out that debit card, because that debit card is attached to your wallet. You have an actual attachment to that wallet because that's your money. That's the money you work for. That's the money you earn. And so you have a more of a connection with that debit card money. But that credit card money, you don't have a connection to that. And ones of you that love to talk about Navy Fed and high limits and and some of these other ones, credit unions that give high limits, all that's fine and dandy. But them high limits come with a high price tag if you're not careful and if you don't have money management. And that's how people can get in a good credit union like Navy Federal and a whole bunch of other credit unions that are very good. I'm not going to just say Navy Federal credit union is the best credit union. There's a ton of good credit unions out there, ton of them. Best financial institution you ever could deal with. And fumble a bag as soon as they get in there. End up filing bankruptcy and have to put the credit union into bankruptcy. And you can never recover from that. Never recover from that. I don't care if you do pay them. They still ain't going to never give you no more money. You could pay them off and they still ain't going to give you no more money. There's rare instances that they give you any more money. Once you screw over credit union, it's a wrap. Once you have a credit union delinquent on your credit report, other credit unions won't even touch you. So you don't never want to fumble a bag with a credit union or a bank or a bank. You don't want to fumble a bag with anybody, but you definitely don't want to do it with them, because those are the people that will give you big ticket items like a home. You got people now, like I've been trying to tell you guys about being careful about these cash advances and buy now, pay now later, and little installment stuff for consumer goods. We got to be more careful and more strategic about our credit. Set credit goals. I did a video about that. Set credit goals. Most of you don't have credit goals. That's why you're applying for everything and running up inquiries and looking risky, because the majority you're not doing it. You're not setting a credit goal. You're not saying, okay, I'm 18 years old. What do I want to do with my credit eventually? I know I want to buy a house. I know I want to get a car. So what do I need to do now? Probably not get that buy now, pay later loan that's going to show up on my credit for nothing. What should I do? Maybe join a good credit union and start building a relationship with that credit union and research that credit union to see in the future, can they offer me the things that I'm going to eventually need? Like a home loan, like a low interest car loan. And I let my direct deposit go into this credit union, and I use my debit card. I use their online banking. I even, build up me a savings. I even get me a CD, and I show them that I'm responsible. And then I apply for whatever credit card they have. And because I've shown them that I'm building a relationship, they will give me whatever that credit card is, even if it's a low limit, like $300, just to try me out. And I'll be responsible with that. I buy something like gas and I pay it right back off. And I use my cash for other things. And if you can't be disciplined to pay it right back off, use your cash. But it's all about being disciplined. It's all about doing the right money moves so that you're setting yourself up. Because credit can open up the doors for so many things. And so many people I talk to that want to have businesses. Credit, if you could get your credit and your finances where you are free because you don't have debt, you have good credit where you can walk into any bank anywhere and not worry about being denied because you got good debt to income ratio. You're not over leveraged. Your cards aren't maxed out. You're not stressed out about being denied. So many doors can open up for you, especially if you want to start a business, because it's not too many places that's not going to look at your personal credit for a guarantee. Even if they don't need your guarantee, they still may screen your personal credit just to see how are you with your money before I give you my money for your business. Because if you're not good with your personal money, you sure ain't gonna be good with business money. And business money when they lend you money, you be talking about thousands of dollars, hundreds of thousands of dollars, depending on what you're doing, right? And so we have to think about those things. Think about the things that you're wanting to do. Sometimes you have to forego the short-term gratification in order to achieve the long-term goal. And if your long-term goal is this home, being able to leave a legacy for your families and all that kind of stuff, then you might not need to put that vacation on your credit card that you can't afford, or buy it on Klarna or whatever. You might want to just save for that. Or better yet, create a business or create something that can pay for your wants. How about that? How about creating a side hustle that can pay for the things you want instead of putting it on credit that you can't afford to pay back? That's how you do that. If you know that you got a purse habit, a shoe habit, like to go get your nails and all that kind of pamper and all that kind of stuff, or guys, whatever it is that you like to do, if you know you or like to buy expensive cigars, whatever your vice is, and if you know that you can't afford it, then you need to create something that will make it obtainable. What do you like to do on the side? Because nobody should be looking at their main income as their only income in 2025. Everybody should have some type of side hustle. Everybody. So you need to look at what is that thing? What is that thing that you like to do? And turn that into a way to make you money to pay for whatever your hobbies are, or whatever it is that you like to do for fun or self-care or whatever. Because nobody's telling you to restrain yourself. What I'm telling you is to make sure that you're taking care of your financial stuff so that when those credit moments come, you will be ready. And that's why I created the Credit Ready program. That's why I created it. Because a lot of people don't understand that it's too late to need your credit when it's bad. Because when your credit is bad, that's when the car is going to tear up. When your credit is bad, that's when you're going to be wanting to find another place to live, because the apartments you live in right now, you're tired of your neighbors. Right? When things are not where they should be in your finances, those just worst times, that's when they're going to come. And so when you rather be on the side of, okay, I don't care what come, I'm good. Because I set myself up to be good. I didn't have the money, so I saved what I could. I made sure that everything else was taken care of, but I saved what I could. I only bought the necessities, and I'm building me an emergency fund and my living expenses fund. I'm building a vacation fund. I'm building a get out of my job and live my dream business fund. Whatever it is, you have the opportunity to change the trajectory of your life and how you have been dealing with your finances and your credit. And if you are a young person and you're just starting out, learn from my mistakes or learn from the mistakes that you've seen others do around you. Because there are so many different examples of people that are terrible with their money in everybody's walk of life. Because it just depends on what level of problems, money problems you done seen. So I hope that this video is going to wake up some people to want to get started and want to get ready and stop the fixing and the cleaning and the repairing of their credit and actually tackle the main thing. And that's the mindset. And that's the habits that surround our money. Those are the main things. When you tackle those things, your credit will automatically get better. Your credit will automatically get better. I promise you, your credit will automatically get better, because then you will focus on the things that you need to focus on. When you're not worried about money, you can focus on the things that you need to focus on. You won't be as focused on repairing to get to the next loan. You'll be thinking, you have to slow down and think. What can I do to create an income stream to pay off whatever that collection is, and pay to get that deleted off of my credit through a settlement or whatever? Can I then reapproach whoever I had that late payment with and send them a goodwill letter if they remove this late payment, because I've been on time every time since then? Because I've created another income stream to be able to pay this loan on time. I'm no longer over leveraging my credit. I'm no longer applying for credit that I don't need. Everything that I apply for is a strategic plan of action for my credit and for my finances. Because the things that you do with your finances today is going to either affect you or your family or whoever is involved. They will be affected somehow. So plant the right seeds today so that you can reap the harvest in the future for whatever it is that you're trying to do. And again, I do appreciate you clicking on this video. I hope y'all don't tear me up too bad in the comments. But y'all know, if you troll, you'll get blocked. But I do appreciate it. Again, if you want to embark on that journey for free, and I'm not just saying this for free and it's not for free. I'm not trying to sell you anything once you click on this, you scan that QR code or you go to my website. I'm not trying to sell you anything. There's a lot of free resources in there that you could take advantage of. And I'll be doing a live every month. We just did one. It was almost 3 hours long. Got the replay in there. So if you join now, you can go in there and look at the replay that we just did this past Sunday on August the 17th. This is 2025. So if you see this in the future, Creator Ready program isn't going anywhere. So either way, whenever you join, there's a course in there that's broke up in 6 weeks, but you can take it at any time for free. It's got a lot of resources. I created a lot of different journals. I got a lot of things in there. And so, and a community of other people that want to learn as well and want to take control of their future. So I implore you that if this video touched you in any kind of way, that you take advantage of this opportunity. And I do appreciate all the love. And I hope that I reached the right people. And I'll see you in the CRP.